Hello, good morning to you all. Today is 31st December 2024. Following 2 months of decline, emerging markets have stabilized this December. Fund repatriation by US investors seems to have receded at this year-end. Thanks to China and Taiwan, Asia slightly rose this month, as did Eastern Europe and the Middle East. But Latin America and mainly Brazil kept declining, disappointing local and international investors. Globally, investors still worry about the impact of US policies over international trade. But despite these uncertainties, China managed to rise in December and rose close to 20% in 2024, better than Indian equity, which went up by 12% in dollar. In tech, TSMC and SK Hynix kept performing. In dollar, the former rose 75%, while the latter went up 11% in 2024. To the contrary, Samsung Electronics fell down 40%. The Korean number one blue chip kept disappointing and is affected by lower DRAM price. In Latin America, Brazil and Mexico registered the two worst stock performance in 24, minus 34 and minus 28% in dollar, a harsh contrast to Argentina, who managed to rise 113% over the year. Overall, the MSCI emerging markets went up 8% in dollar and 14% in euro in 2024.
Donald Trump's victory and the international environment do not seem to favor non-American markets. How do you see emerging markets evolving in this environment?
There's no doubt that uncertainties remain, particularly in global trade. Additional US tariff and weak demand out of Europe do not favor emerging exporters, hence the fourth quarter 24 decline. On the geopolitical front, we will have less election in 25 than in 24, but US-China relationship is not likely to get warmer anytime soon. In tech, DRAM price uncertainty remains. This mid-cycle price correction could last longer than expected. However, in 2025, local demand in main emerging countries could positively surprise thanks to the Chinese stimulus and to looser monetary policy in Asian countries, as well as in South Africa and in Mexico. In addition, huge gains made in cryptocurrencies, which is around $1.7 trillion, could positively impact global consumption. Lastly, in 2025, we should see concrete applications of new technologies such as AI or autonomous driving. These game changers should favor Asian technology stocks.
In this environment, how do you position GEM equity for 2025?
While focusing on internal demand, we mainly position GEM equity on growth stocks linked to domestic consumption. These investments account for 70% of the fund. For example, 25% of the fund is invested in Chinese consumer names, 18% on India internal demand. In fact, only our investment in Korea and Taiwan tech are exposed to global demand. They represent 25% of the fund. In this sector, we focus on AI value chain, where earnings visibility lasts up until 2026. We thank you for your trust and loyalty, and we wish you a very happy new year. Thank you.